the thing is this: you have to know basically where the market rejects and where the market gives you some fake candles that points you in the wrong direction and all that. So those points are your reference points. You must understand that those points are your reference points. Now, I remember last 2 weeks we had this particular pair being analyzed, Euro card, and I made mention of these certain levels, these distinct levels that smart money actually created. These levels were so clean that as a smart money trader, all you are seeing is manipulation. All you are seeing is manipulation. Now, looking at this level, remember during our basic class, I always mentioned double tops and double bottoms, they are not your friends. Anywhere you see the market reverse, those are potential targets for smart money because that is where money is sitting. Okay, so in order for them to fill in their positions, they have to take the market towards that direction. That is why we always wait for the equal lows to be taken out. We want to see how the manipulation is being done at those certain levels. Okay, now we see this point here. I'm going to include the session. Okay, now we had this clear move down here. We had this clear move down here, this move down here. This is actually a liquidity candle because, yes, looking at it, the market is giving us a series of higher highs. We have a higher high here, we have a new high, and a higher low. Now, this is the point where most traders enter. This is the point. Remember, you have your normal structure in the market, which everybody knows, but getting your sniper entry most times requires some certain levels of, accuracy, so to say. So you see break and retest, then you see before the market starts giving you that impulsive move to the top side, it has to take out liquidity, some sort of liquidity. Now, at some points, we can actually enter here, but it takes, you have to be an advanced trader before you can take the market off this point. This point right up here, for you to take off this trade from this point, you have to, be an advanced trader before you can pick it up. So what I normally teach you is that I wait for the most safest way is to wait for the move to come back. Now, it might take a whole lot of time, but remember, there are other trades that will also be playing out while waiting for this. But you see this clear candle that took out these lows here. Repetition is for emphasis. You might feel you know all these things, but you don't still understand the concept behind this whole thing. That is why the market will always go against you first time. Okay, now you see these lows that were actually taken out. Now this was done by the Asia, I think it's Asia and London market, something like that. Let's use the session again. The session, okay, that was actually created by the London session. All right, so this manipulation happened during London session. Okay, this happened during London session. So let's give it a name. Let's tag it as London session. Okay, so London session FU. Okay, so we'll see how the market, came below these lows here, took it out, engulfed it, and started making a series of higher highs and all that. Okay, now before the market came back to this place, now watch what happened. You can see clearly that the market was creating liquidity. Then you see this push up to this point, then followed by the move that actually went down to close off this order. Remember our smart money rule, picking off any entry, you have to use the wick, the body, or the 50% of that candle. Remember that. So at every point in time, remember that you must always consider these entry points. You must consider these entry points. Consider this entry point is very vital. You can use the week, you can use the body, you can use the 50%. Now, if you are using the week, remember you have to factor it in your stop loss. So most times, most entries are on the week. The market might now take you down to the 50%. Like I said, the institutions can decide where they want to take the market to. You might not know until when they've grabbed all the liquidity that is required. That is when they move. Okay, but if the week and the body is very short, most times we take it from the week. If the week is very long, I advise you take it from the body. Okay, now looking at this candle here, all right, let's see. We had an imbalance here, then we had the body and the week. Body and the week. I had the body at 400. Remember the whole number theory and smart money. So, sorry, 410. Okay. Right, the imbalance was here, filled up. Okay, now let's see. Remember what I taught you about session timing. Session timing. Okay, now let's see. Remember that was done during what? This candle was actually printed during the London Open. Now, can we see that happening? You see the market was pushing down towards that mitigation candle. Around that same time, I see the London market moved it out. So points like these are very, very, very important. You have to take note of the session that printed the candle, see when they're going to come back. If it tallies, then you have a perfect snipe. Okay, so now the last sell candle that closed off this particular order block here, remember this is the last sell candle that took out liquidity before this push up. Now the market giving us a series of equal lows, took it out, gave us a little candle that pointed direction that this market was going to go up, but it failed rally, then came back again, took out the liquidity, then mitigated off this H4 candle. Okay, now this was the last candle that closed off this order. Now the institution pushed it up and brought it back to that last candle that took out this order block. They also closed off this particular one. So this is like a step. Remember what I taught you about step OBs. So this is just like a step. This is now a step. Okay, now we see the entry. After this one, this candle closed off this candle. Now, coming back to close off this candle, the next one coming back to close off this candle. All right. This is a typical step OB. All right, so these are the entries you had on this trade. Okay, so we had a move up, we had this other one, and we had this push up here. Then we had another one that came down to this point, went back up. So next target is this high here. Next target is the high. If it breaks above that structure, then we might have a little retracement. Boom. Keep on going higher. Right? So that is it. So understand how the market moves. Okay? Look at how the market played out on these levels. The last sell candle moved up, came back again, closed off this particular order, moved up again, came back, closed off this particular order, then finally moved up. Okay, now Let me also show you the reversal points for this market here. Look at this trade very, very well, guys. You can see that at this point, the market gave us a very significant candle right up here. You see this H4 candle that closed just London session right here. Okay, you see this candle that closed up above all these other ones here. That's also an equal high. New York, Asia, intraday high. So see, closing off above, giving you the candlestick direction that this market is going to go up. Now your main purpose is just to grab liquidity, take out stop losses, you know, confuse traders, retail traders that this market is actually going up. You see this bullish candle that closed off above here. Okay, now everybody will be buying off this trade. Believe me, everybody will be buying off this trade. Now, also another target for them is also this high. This high is also another target. So at every point in time, the market will always try to take out highs before it makes the intended direction it wants to go to. Okay, so now taking off this trade requires a whole lot of patience because one, most of the times this type of trade actually traps me before, not now, okay? Because I'm seeing like a consolidation phase here. I'm having equal highs. Now, we had this buy candle up here during the Asian session. Then the next candle came back like it engulfed it. Then what next? It engulfed it back again. So what will you be thinking at that point? You'll be thinking, wow, this market is going to come back here, then start making that move up. Yes, it happens. But when it comes to areas like this, when I see the market moving sideways like this, I'm usually very cautious. I'm usually very cautious because this kind of move, this is a pure manipulation candle. Okay, now we see when the market traded below this particular candle, going back to this point to mitigate off this order block right here. Now watch what happened. It came back to that point, went back up to this candle. Now we have an imbalance week to week feel here. You understand that? Imbalance week to week feel on this. Okay, at 90. All right. So balance fill on this candle. Remember, you're not going to use the body of this candle. Why am I not going to use the body of this candle? Because we didn't have this candle closing below this candle, one candle. So we still had like two candles that, you know, came back to engulf it. And between this point and this point, there's a kind of an imbalance here. Okay, so my entry will be at the imbalance, not on the body. This is a different type of entry, okay? So at this point, this is where you should have taken profit and this is where you should have sniped from. You're selling this particular currency. So hold on, let me put that number again. 80, okay, so that was the imbalance field. Imbalance field. H4 imbalance field. right? So right, so we had this candle mitigated off, closed off this particular one with this drop here, this drop closing off this other candle that closed off the previous one. Now going up, coming back again, closing off this one, then moving up. So at every point you see the market is giving you higher high, higher low, then a new higher high, then higher low. Now we had the BOS here. We had a break of structure here, right at this point. This is combining everything I've taught you. All right, so it shouldn't be strange. Okay, so we had a BOS here. Now, the next point, market comes back. Remember, the next target is this high. The market has to clear this high. We have piles of money sitting up above here. We have piles of money here. So these are not your friends. So when you see the market moving like this is the target. The market wants to go and target all these highs, double top. So be prepared. We have to look for entry from this point. Okay. So combining the Fibonacci that I also taught you in the last class, if you want to see the retracement level of this particular trade, from here to this point, we can see that we have that reversal at the 78.6, which is like 78.6% discount of the price. Okay, remember the concept I told you about the Fibonacci. It's just a discount tool. If you want to buy something, would you want to buy it at 23% discount or 38% discount or 50% discount or 61% discount? Which would be more preferable? I think the smart money traders always prefer going for 78.6% discount. Now, if both of us enter this trade, you enter for buy at 38% discount and I enter at 78% discount. It simply means that I'm going to make more profit than you because I entered at a premium price. So now looking at this retracement here, you can see 78. Okay, now let's see if we can measure the second one. Retracement of the second one, that is from here. When it starts reversing, that is when we can measure this. Okay, so let's just leave this retracement for now. All right, unless I want to start using fib extension. I've not taught you guys that. Okay, so remember, when you are taking trades like this, you don't start selling at this point. If you want to sell, you don't sell here. These are institutional targets. So whenever you see the market moving like this, you should know that it's targeting this high. Believe me, it's targeting this high. Okay, so now this is Eurocard analysis. All right, I've given you the bias, what you should be expecting in this market. By Thursday, we are going to review this particular trade again and see how it played out. So that is why I always like, taking time to analyze a particular pair based on what I've taught you from the basic level of smart money. Now we are entering advanced. Okay, remember all your equal highs, remember your BOS, remember your imbalance, remember your order block. We are not into Fibonacci fully now. Okay, but just understand all these concepts. If you actually followed each of those classes sequentially, then understanding all these other concepts or this other approach I'm giving to you shouldn't be hard. Okay, so this is all about Euro CAD. Let me go to the next pair, which is Euro GBP. Let me show you the step OB that happened there. The step OB, the step OB, the step OB. All right, so that was yesterday. I put this trade, but something happened. It didn't pick my entry. Okay, it didn't pick my entry because I had a clear BOS over here. Let me remove my sessions again. I had a clear BOS here. Okay, I had a clear BOS up here. You see this close above here. Now look at our step OB right off at this point. Now this market came back here to close off its order. I had my order, I had my pending order here, but it didn't activate because this thing happened around 10 o'clock when the spread is usually very high. That is when this thing happened. That's when it happened. So this market never got here. If you check your MT4, it didn't come here. So they use this. They use the large spread to close off this order. Okay. Now this was my second entry. When I missed this, I now waited for BOS on the 4-hour time frame. When I missed this, remember this boxed area? I now waited for BOS on the 4-hour time frame. Now look at it. BOS. Are you seeing it? This candle closed above this bearish candle. Then your entry will just be at the body or the imbalance field of this candle. Right up here, imbalance field. BOS, imbalance field. Now, my stop loss will be just below. I'm being conservative. So this market shouldn't come back and engulf this whole candle again. So my stop loss is usually below the candle that gave that BOS. Okay? That is where my stop loss is. 40. Remember that? My entry was right up here. 30. Yeah. So this was just about a 10 pips stop loss trade. Right up here, also 10 pips, thereabout. Now you see clear BOS. This didn't activate. This was the step OB on the 1 hour right here because they use spread to close off this order. So now let me see if this market is going to close above this structure here. Now, clear. It closed above BOS. Now, imbalance field, the market comes back down, activates the order. You have your stop loss here, and it moved out. So this market has a lot of things you should learn. Okay, so now this is also another one here. We have at this point right here. So mark this point is also another point of entry for tomorrow. Okay, now this is another entry for us. It's another entry. Remember, we have equal highs here. So where do you think this market will be going to? This market will be heading towards these highs here, of which it's already doing. The market is doing that. So this is not a reversal type of trading, the smart money. This is the continuation aspect of it. Okay, now you see this area here, we have an imbalance. We have equal highs here. And what are you expecting? The market should come back here before we can start seeing that drop. Okay, but before that, this is our entry. If you want to enter again for this trade, the candle that comes back here, your stop loss will just be underneath this buy candle. Here, your entry, wick, body. There's no 50% here. All right, this candle is a very small candle, so just factor it in your stop loss. The entry is here, the wick, or you choose the body. The stop loss is below here. Okay, now your take profit is around this imbalance here. That's where your take profit should be. So if you check this trade, let's see, we have this as 11 pips. Then our take profit is 40 pips, 1:4. So this fulfills our minimum risk to reward on smart money, at least 1:4. So this is okay. So this is a good trade. Now, why did I choose this point? Can we go to the daily time frame? Let me show you what happened. Okay, now the daily time frame, it's actually this. Watch out, we have this point here. See how these candles were all rejecting. Then you see these equal highs here, equal highs, this daily high, 1, 2, 3. Then you see this candle that just went up, took out that liquidity, then that drop started. Are you seeing when the drop started, the market didn't come back to fill this and mitigate off this daily order block? So you can see my label here, D1OB. So that is why I'm looking at this market getting to that point before we can start seeing a little retracement. Now, also see something very interesting. Now, this is another BOS on the daily time frame, because this candle is closing in the next 1 minute. So we have a BOS right up here. We have a BOS here. Now, are you seeing? We have a BOS here. Now the BOS is, this is a daily BOS. Let's give it that. Daily BOS. Okay, that's our blue line, daily BOS. Now, let's go back to our 4 hours. Let's see how it aligns with everything we have. Okay, daily BOS is right off at this point. The daily BOS is right off at this point, and we have our step OB just sitting below at this point too. So looking for that little retracement down to this point, then have some buys tomorrow. Okay, so this is another trade idea I've given to you on Euro GBP based on everything I've taught you on equal highs, equal lows, step OB, order blocks, BOS. Everything is coming into play now. Everything is coming into play. Okay, now this is for Euro GBP. Now the next one I'm going to go into now is USDCHF. Lastly, before I start taking questions, USDCHF. We analyzed that trade the last class we had, and I told you those points where the market will reverse and where the market will react. Okay, now let's check that. Let's check that out. Let's check that out. Okay. Hold on a bit. USDCHF. Yes, someone said this trade actually hit the stop loss. Yes, I was actually in the trade, and I showed him I actually sold that market, and I went off. It's hardly before the market hits my stop loss, because it cannot just happen like that. Okay. Remember, any smart money snipe must give you profit. That one is something you should know. If you know what you're doing, every smart money entry should give you profit. Okay, so we're in the next day now. A new daily candle has opened. Let's go to our 4 hours time frame. So check out what happened. Okay, so okay, 4 hours time frame. Okay, this was the point. I guess this was the point. Yes, this point here was where you took off your trade and you said it hit your SL. Okay, let me explain to you. That was a 50. Okay, then my chart, I think it's clean because of, I don't know. Okay, so we have this equal highs here, and I had a step OB. This is where I bought from yesterday. Most of you that saw my status too, I bought from here. We had this close off, then week. I actually use week because when it's like this, most times it might not get to the body of the candle. So I just place my entry on the week, 60. That was it. And okay, now I bought off this point. I TP'd at this line 91750, the black line, which is the H4 order block. Right off here, bought off here, took profit here. The next order activated. Are you seeing this drop that just came here? Now this drop that came here, I'm taking reference of this particular candle here. We have another step OB. So if this market doesn't, close below here, and then there's a problem. And also seeing the timing of this particular trade. Let's open the timing again. Okay, now this happened when? Now watch out. This mitigation candle, this OB, this order block, this is an Asian session. Now you see, it was during the Asian time they came and closed up their order. What do you think the London traders will come and do? The London traders will take out that high. That's the next thing. You have to start thinking like a smart money trader. Don't be thinking like a retail trader. That is why I left this trade. Like I left in profit. Immediately it just came down. I saw this and I said, no, this is actually an Asian session. The Asian market will not push this market down. This is the USD Swiss franc. This is not an Asian pair. So this candle here cannot be responsible to push this market down. That was just it. Using the session timing. If you understand the session timing very well, it's going to be hard for you to lose any trade. It's going to be hard. Now just look for that candle. Look for the candle that printed your order block. Is it in line with the session that is pushing it towards that point? If it doesn't tally, then you have to be a little bit conservative. All right, so we have that equal highs there. It was a clean one, but this candle here, this highs here, yes, London market doesn't like this high. I think, see how they came here and took it out. So I'm not in a buy, I'm not in a sell. I want to see a clearer direction first before I can take off this trade. But what I'm trying to say is this trade actually hit the SL because the Asian market has actually closed off their order block here using this candle here that just went down. All right. Okay, so that being said, that should be the end of today's class because all I'm just trying to do now is to review what I have done in the previous class, tell you how and what happened and why did the market react the way it did. Definitely you should have answers for anything the market will do. Okay, once you miss an entry, there's always another entry. If it doesn't give you another entry, then you leave it. Like I was at this point when this market was coming back, I wanted to buy at this point. Remember our concept of imbalance? This was actually an imbalance here. So I expected this market to come back here to fill this imbalance. My order was just here. Imbalance. I expected this market to come down and fill the imbalance, but it didn't come. So immediately it moved out. Then the next candle engulfed it. I saw a step OB. I shifted my entry from here. I put it here. The market will always give you entries. If it doesn't give you entries, then you leave it. It's as simple as that. Okay, so I'm going to give you more of these entry points on Thursday because I have a whole lot of them. I have a whole lot of setups that are coming up. And before we round up this class, I'm going to give you a trade idea, which is a GBP NCD. I'm actually waiting for it to actually play out. It's a very good trade that has everything in check. So I'm expecting that move to happen tomorrow during London session because the London traders actually printed that order block, GBP NCD. I asked one of you to check that pair. Maybe some of you didn't. Hold on. I'm trying to move this stuff. Okay. This is GBP NZD. All right, so this is it. GBP NZD, it's actually very good. Everything is in check, and we have this clean point here. We have this candle. You see this equal lows. Now, London traders pushed it up, then crashed it down, took out orders here. BOS now imbalance. Then the next day, we had this consolidation, market moving sideways. We have equal lows here, have equal highs, Asian high and New York high. Now trades like this are chicken. Like you can't miss setups like this. It's like this, you can miss it. So you're seeing how this clean levels taken out here, goes back up. Now I'm expecting this market to come back here, round this session, round this London session tomorrow, go back up, fill the imbalance. Using our Fibonacci 2, we have that point also being the 78.6. So, okay, so this is the trade, all right? So this is it. You take out these highs, get back to that candle, mitigate off that, then push the market down. We are actually in a downtrend, so serious downtrend. So definitely we're in line with trend, all right? So we are not looking for reversals here. So this is it. Okay, I think I've given you enough nuggets this night. So you can ask your questions now. You can ask your questions now, right?